What is good, guys? It's Ray J back with another video. And this one, I'm going to break down what's going on with the overall market, what you should be watching for as time goes on. I'm also going to talk about why next week is going to be absolutely massive for the markets as we have some very important data coming out. We have CPI data coming out, and this could cause a very big move. I'm going to be breaking down why I think that CPI will most likely launch the market even higher based off what we're seeing. But before I break anything down about why that is, what factors dictate CPI, and why there's a very good chance of more upside for next week, let me just mention a couple of things. I am firstly not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 6 free stocks. If you deposit $500, you're guaranteed 20 free stocks, and putting in $25,000 or more guarantees you 70 free stocks plus 12 months of level 2 data. Now, this offer ends in just about 10 days from now, so check it out before they run out. Anyways, let's break down what's going on with the market. So far, Tesla's been uptrending, respecting our yellow trend line of support, making higher highs so far, but it's also getting a little tight as we're seeing this wedge develop, this penetrate over here. So as Tesla gets tighter, there's a very good chance of a big move that's coming, and CPI could be one of the factors that leads to a massive move in the markets and also for Tesla. So when is CPI coming out? It's going to come out on Tuesday, an hour before the market opens, and we're expecting CPI to be 3.1%, which is one of the lowest expectations we've seen in months. On top of that, you can't forget that not just months, years actually, and we also have core CPI. That's expected to be the same at 4%. I think there's a good chance that these will be either as expected or below expectations. And if we end up hitting certain levels, we could see some major upside in the markets. I'll be breaking that down in just a few minutes. Let's first talk about CPI. How has this thing looked? As you can see in the chart, CPI has technically been downtrending. I know people say that CPI is manipulated and this and that. I agree. I know these numbers are manipulated, but you just have to go with the numbers because that's what the market's going to be looking at too. And we don't want to just try to be right all the time. It's more about us just kind of identifying how the market is viewing the information and then making moves based off that. So, with that being said, okay, I'm not going to talk about is CPI going to go up or down or this and that because we don't truly know what the real numbers are, right? But what I can tell you is based off the data we have, these manipulated numbers look like they're showing that CPI is dropping, and there's a very good chance that that's going to continue. The numbers will show that during the next report. The first reason is the fact that we're downtrending clearly on CPI. It was downtrending for almost the entire last 12 months. There were just two exceptions, which was an increase in July and then August. And then besides that, we saw another downtrend in September and October. And then on top of that, you could see that for all items, basically core CPI has also been downtrending. It's getting very tight as well. It's a lot more sticky, but it's still continuing to downtrend. So that's the first factor, that CPI is downtrending. And the last few reports, almost everything has been very close to expectations, if not below expectations. That's another very, very good sign. Now, to add on to this, there's another thing that's correlated with a CPI. That's going to be the crude oil price. You could see how they came up together in the past, came down, up, down, and the list goes on. As of recent, they've been both pushing quite a bit, but now crude is starting to come down. I wanted to add that if you look at the pattern right here, if you look at like crude futures relative to CPI, you will notice that right here, they came down together, they came up together, like during this period, they came up together here, respected an uptrend together, they came down together, up, down, up, down, up, down, up a little bit. See, they both came up just a little bit, and then they both started coming down. But here's the interesting thing I wanted to show you. So if you look at crude, right, notice how in September, crude was at 89, okay? CPI was at 3.69, okay? That's cool, right? October, we had crude at 85, so crude went down. CPI was at 3.2. And then for November, we don't have the data for CPI yet. It's about to come out, but crude was down to 77. So crude went from 89 2 months ago, or that was like 3 months ago, to 85. And then it hit 72 basically. It hit 77 and then 72 basically. That's where it is right now. So it basically just continued to drop and drop and drop. CPI started to drop, and the question is, what is CPI going to do after that? You see, we have the data for CPI for October. That's where it ends. We're waiting for November to come out. We have the data for oil. We have it for, you know, going all the way to right now. We have it for November and it actually dropped more, which suggests that when CPI comes out, there's likely going to be a drop in CPI. I hope that's as clear as possible. So that tells us with crude dropping and continuing to drop through November and December, that when the November CPI number comes out, there's a good chance it's going to follow the trend and also drop. I also want to add that because energy is so impactful and has such a big domino effect on the current prices of different like commodities and such, not to mention like transport, manufacturing, the list goes on. It's very important to look at retail gas prices. I think this is another big factor, at least for CPI. And what you'll see is that looking at the data, energy makes up such a big sector. You will notice that we actually got the biggest drop we saw in energy technically for pretty much the entire year. The biggest drop came in November in terms of the retail gas prices. This is the dollars per gallon on average. So for October, the average gas price in America, and this is once again for this is for retail gas prices. On average, it was $3.74 in America. Then it went down to $3.44 for November. Now, this is like a 30-cent drop. We never got that. I saw a 21-cent drop. I didn't never saw a drop that much. So we got a big drop in gas prices for the month of November, at least according to the data. And that's suggesting with gas prices dropping, looking at crude futures, once again, showing that for November and December it's been dropping. And we're just waiting for the November data to come out for CPI, which is going to likely follow that. Looking at oil prices historically and then looking at the trend on CPI, I think it's a pretty fair assessment to say that, look, okay, CPI is likely going to see a continuation to the downside, and it's likely going to be either in line with expectations or below expectations. There's a very good chance looking at the crude oil data, the retail gas prices, and all these different factors. Now, to add on to this, there's a very high probability that the Fed is going to pause again for December 13th, and I think that they're going to do it again. So there's a 98% chance it's going to happen. It's almost, it's almost 100% of a guarantee so far, according to the markets and the way it's pricing things in. So the Fed is most likely going to just skip on the rate hike again, maybe give us no more rate hikes for the rest of the year, which is once again pretty good for the markets. The market already priced that in, so it's not going to be a big surprise. The fear and greed index is currently at greed. Once again, very, very strong, but we're not at extreme greed technically, despite other indicators already reaching that. The puts and call positioning is still kind of like low right here. And then don't forget, guys, that every Friday we have like either hundreds of thousands, if not millions, of SPY puts expiring. There are actually more like puts on SPY than like the others out there. I'll show that maybe later on, but for now, I just want to focus on the charts. So, what do I think is going to happen to Tesla? We're forming a wedge right now. It's been uptrending since, and I think that we might see Tesla basically get very tight and expect a big move on the day of CPI. Basically, that's why I have this like gap right here, whether we gap up or gap down. If we gap down, Tesla could sink all the way down and lose this yellow trend line, which I find very unlikely. I find this one very, very unlikely because of what I just showed you. We're most likely going to get a good CPI number. So the green one is looking more probable to me, where Tesla gaps up and we end up trying to fight this blue trend line of resistance. We might break this and make our way up past the 250 level, and we might start breaking out even more. So I think, in my opinion, Tesla's going to break out to 250 plus in early next week. Tuesday specifically could be a very big move to the upside. I think that's going to happen to Tesla. We're going to squeeze upwards. For SPY, what's happening for Tuesday? I have this drawn out. Hopefully it's still there. So basically, SPY is uptrending right now. What's interesting about SPY is you guys could just ignore these lines for the time being. I just want to mention that for SPY, we used to be stuck between 458 to 460, and we had support between 453 and 455, going back and forth between supply and demand. We managed to get a break and we closed above 460, which is a very bullish possibility. So on Monday, if we continue higher, that's awesome, but it's going to then depend on CPI. So if we get a hot CPI, if CPI is hotter than expected, if inflation goes up like crazy, SPY is going to tank like this. If CPI is below expectations, if it's a good CPI, if it's 3% or below that, we're going to see SPY break out. Now, I just want to mention that we're expecting 3.1% for CPI. If we get a 3% CPI, I think SPY has the potential to push all the way up to 465 or so on the day of CPI and break out like crazy. If it's below 3% at 2.9%, we could hit 467 or higher. SPY could just explode. I know that sounds like crazy, but I think that's very probable. So make sure you watch these levels. All right. So with that being said, guys, I just want to make it clear. Expect a big move on the day of CPI. I don't know with 100% certainty. I'm not like a fortune teller, but I think it's very probable. It's very likely that this green line you see, the breakout, is going to play out, and SPY is not going to get rug pulled by CPI, but break out instead. To add on to this, on the QQQ, I just want to mention that the QQQ is holding up nicely in this nice accumulation formed right here. I could see a nice breakout to 394. A bullish CPI could, on Tuesday could break this thing above that. We also have like 396.5. That's where we have an unfilled gap. Then we have like 398 to 400 coming. 400 could be a reasonable target, believe it or not. It is a real possibility. I also see it breaking 394 very soon. A bad CPI is going to take it back down to the 380s, 385 or so or below that. I don't think that's going to happen. I think it might consolidate a bit on Monday, then break out. I think there's more upside coming for Tuesday for a potential squeeze, and we could see this thing get very close to the 400 level after that, in my opinion. For Nvda, I would say that Nvidia is looking a bit more bullish. We have a nice accumulation structure, a double bottom like formation. And if it does, excuse me, sorry guys, if it does end up coming down like this could just be forming like an inverse head and shoulders. And we could just bounce from here and start pushing up towards this imbalance. So whether it does come down or not, it all depends. But I think it's going to break out to at least 480 plus soon, maybe even above that. I think Nvidia has a breakout coming. I'm leaning a bit more bullish. Finally, the last one I just want to talk about before I end the video, it's going to be Aapl. Aapl is not looking as, I would say, as convincing because of one little issue. So the one issue I see for Aapl is that we have this tight resistance at 197. That's where we got a big rejection before. And you could argue we have like a rising wedge. They don't always play out though. So I just want to be open minded. So I just want to note that we might see this thing push up for 197, maybe like kind of reject and trade a little sideways over here, chop around a little bit. And then I think that if we do end up holding between 196 and 197, Aapl is going to determine whether or not it's going to gap up or gap down. If we get a bearish CPI, if CPI is hotter than expected, if inflation is going up, Aapl could gap down and start sinking back down to like 193.5. Could happen. If we get a good CPI, let me just color code this just so it's easier for me to identify. If we get a good CPI, if it's lower than expected at either 3%, uh, if it's as expected, that's good. At 3% would be like a little below expectations, and then 2.9% would be a lot better than expected. Apple's going to gap up and start pushing. We could see this thing get close to 200, then that is a possibility. I know that it looks a little less likely looking at the technicals with the rising wedge, but it's still a possibility. And I still think that that could happen if we do get a good CPI. Apple may not be done. So could we gap up and go? Are we going to gap down and fall? My gut tells me the upside is a lot more probable, and that's what I'm seeing for the market. So, in my opinion, I think, and this is my prediction, I think we're going to get a decent CPI looking at the crude oil data, looking at the crude oil futures, looking at retail gas prices and the trend on CPI. I think that CPI is most likely going to be 3% or 2.9%. That's going to launch the market higher, most likely. Okay, I don't know for sure, but that's what the data suggests. And I think that core CPI is going to likely be below 4%. I think at 3.9% or below that. I think there's a good chance that the market's going to like it. We're going to see a nice squeeze on Tuesday. So that's what I think is most likely going to happen. Can I promise this? No, I mean, I don't know for sure, guys. I'm not like a genie or a fortune teller. I don't know for sure, but I think it's very likely. And I just wanted to share this with you because I believe that this will provide value into your guys' like concepts, into your like trading, into your ideas, and also into the way you're looking at like these CPI reports and the charts so far. All right, guys, so that's it for this video. Thank you all so much for listening. Please have an absolutely spectacular weekend, and I'll see you guys in the next one. Thank you, and peace out.